believe that this is a good trend line to have into account. So, well, you just can enter a trade and scale up your position here, buying. It's quite easy. But what I wanted to show you was yesterday. That's Monday. That's a really clean setup. This movement is really, and you're going to be thinking, but I've been saying, well, how is this a good movement? Yeah, just look at this 1% of crude oil movement in just in a span of 4 hours. It's pushed up and down like 5 times. That's amazing. So you are going to go to the same chart here. Well, you can put the 1 day 1 minute, and here I'm going to do the same 1 day 1 minute, and going down. So our markets open at 11:30. Here you can see that price started going down. I don't like to make so much trades in like the first half an hour or 45 minutes, since that's where the market is kind of consolidating. I do like to take trades in the first like 3 hours of the market, but not in the first half an hour. I like to wait typically to half an hour or perhaps 45 or even an hour in order to start my trading. So UWT moves the same as the crude oil. So we can see here that's an ascending channel, and price moving up, going down, and when it's starting consolidating and going up, we're going to make a trade. We're going to, here we don't need to have the fear of missing out. That's the FOMO, because it's approaching a common resistance and support. That's the SML and also the VWAP. So we are not going to enter a trade here. It's a terrible trade. We would have profit at the end of the day, but it's not a good time to enter a trade. It's better to wait, for this position to make, and you enter the trade perhaps at this point. That's the point of around 12:15. So we're going to see the 12:15, enter the position here, and hold to. You're going to be asking me, well, which is the desired exit point here? Well, the desired exit point here would be between this high and between this high. You could state that this is a good exit point, but it's really kind of greedy, asking for the price to push up all the way up to there. So you enter the position at 12:15. 12:15 is here. You enter the position here, and you hold it until it hits this span. So, well, if you like, you can exit trade at 12:30. In just 15 minutes, you're going to be making 0.7%. That's a good risk-reward ratio. Look, if your price is pushing down 11.90, you're going to close trade with a 0.2% loss, 0.25. With other outcome, you're going to be gaining 0.7 or 0.8. That's quite good. It's more than 1 to 2 risk reward. Well, if you don't like that price point and you see that price is falling behind, you can see here, but well, here you have low. You say, well, I'm going to enter the trade here. I have lost this trade. I didn't enter the trade here. I'm going to enter right about here. Not in this candle, not in this candle, not in this candle, not in this candle, not in this candle. We're going to be enter the trade on this candle. That's the 12.50. 12.50 here. Enter the trade here. when are you going to close the trade? Well, depending on the volume, there are lots of things to take into account when trading. The most common exit point would be the same as we had previously, this price point, and the stop loss would be if it lost these highs. So if it dropped like here, so well, let's say like a 0.2% loss in one side, and the other side we have this big candle of price hitting 1251. So it's just like 1 or 2 minutes after. It's a really good trade. The half of the candle, it's a 0.7%. But if you were in a trade here and you see this kind of volume, it's really this kind of volume here in this candle, it's really big compared to what you have been trading in the previous 2 hours, at the previous hour. So, and here in UWT is the same. So, well, you enter the trade here, and if you see this big candle, green candle, with not a lot of volume, another green candle that's huge with this kind of volume, you hold trade until your next desired exit point. That's here. So you exit the trade at 53. Yeah, it's a 1.2%. It's a really good profit. Remember that brokers such as TD Ameritrade don't charge you any commissions on US stocks, and well, this kind of crude oil and these shares, this ETM and ETFs are really good profit makes. The profits are really good since they are leveraged, so that's not what you're not going to be losing your trade or winning a trade without taking into account the commissions and the spread of the spreads can be quite a big high at some times, but well, that's not where you're going to be deciding if you are going to lose or not a trade. So well, here you can hold the trade, and then you here have like from 30 to 1350 price range that perhaps you're not going to take a trade because this was going down like really quickly, push down, and you can say, well, this is a kind of consolidation for price to go down, and it was not the case. But this is a really it's not neat to enter here. It's not quite good, I would say. Price going up to previous resistance point here, and well, as you can see here, there's a lot of volume on this high, and that's this high. Well, now I'm going to be showing you the next trade that you could make. That's a trade on DWT. This pushing back. Well, right about 13.15 or something like that. 17. Right out here, you enter the trade. I just click the middle of the candle so that you don't say that, well, I'm going to enter the trade perfectly or I'm entering the trade awfully. So that's the half of the candle. The half of the minute you enter the trade. So well, here you enter the trade right out here, and your desired exit point would be like kind of here perhaps, or here. That's the previous lows. So you would say, well, and right out this area, I'm going to be exiting the trade. So as you can see here, and remove the line, if you enter trade here, you're going to see a potential profit right out this point, and risk is hitting the higher VWAP, but you're not going to let that happen. You're going to close the trade if it continues going up. So perhaps right out here, you're going to close the trade. It's a really good 3-to-1 risk ratio, risk to reward ratio. So well, you enter trade here, and you hold until it touches this area, perhaps perhaps like 5 minutes after you enter it, or perhaps like 15 minutes. But well, whichever is the case, it's a good trade. You enter a trade here and you close, or here that's this price point, or this price point that's here. So I'll just into a 1% profit potential, and the other like setup is losing 0.1%, so that's losing 0.3% on DWT. These TNs are also leveraged, so well, as you can see here, this movement is 2%, and this movement is only less than 1%. Crude oil moves less than natural gas during this time of the year. As you can see, natural gas is like really bullish someday and really bearish another. But well, I think that's going to be all. Probably I had the video breakdown into 2 different videos because it's really quite long, or perhaps I just make only one out of it. But well, thanks for watching my video, and well, hit the like button, subscribe to my channel, and I'll keep you updated with latest news about the stock market, natural gas, and crude oil. Thanks for watching my video.